Hello, my name is Jason Mercer. I'm the Toronto Real Estate Board's Senior Manager of Market Analysis. Now, we've seen quite an active market through the first 5 months of 2014 with both sales and price up on a year-over-year basis in comparison to 2013. And certainly there's been a lot of commentary in the media to go along with this. So I think it's important as we move to the halfway point of the year to update our outlook through the remainder of 2014. And so let's jump right in and start off with sales. And so on a year-to-date basis, we've seen sales through the Toronto MLS system for the TREB reporting area, which includes the GTA, South Simcoe, and Orangeville. We've seen sales in that area up by almost 5% on a year-over-year basis. And the key factor underlying this sales growth or this demand is the fact that home ownership in the Greater Toronto Area has remained affordable. And we'll talk about affordability in greater detail in a little bit, but I just want to jump off and look at what we expect to see for sales through 2014 as a whole. And certainly we expect a similar rate of growth as we move into the second half of this year. And so overall, we're expecting to see 90,500 sales for 2014 as a whole. And this will be up in comparison to a little bit more than 87,000 sales that we saw in 2013. So while up, it's also important to point out that we won't be reaching the record level of sales that we saw in 2007 when we saw over 93,000 transactions through the Toronto MLS system. And so there's a couple factors underlying this. I've already keyed in on one, affordability, but number two, the impact of a constrained supply of listings in the marketplace has been a key factor as well. So let's talk about both of those in turn, and let's start with affordability. Because when you think about how the majority of households in Canada purchase a home, and certainly drilling down into the GTA, they do so through the use of a mortgage. So these households are sitting down, they're looking at, well, what share of my income can go towards these major home ownership payments like mortgage principal and interest, property taxes, and utilities, and still leaving me with, or leaving our household with enough money to pay for the other costs associated with living. And so what we see through the first 5 months, or almost 5 months of 2014, is that share of the average household income going towards mortgage principal and interest, property taxes, and utilities is sitting at about 34%. So that's a little bit higher than what we've seen, say, for the previous 5 to 10 years, but at the same time, it's still well below the federally mandated ceiling of 39%. So by and large, you're seeing the great majority of households in the Greater Toronto Area could certainly comfortably afford to purchase a home and make those payments over time. Now, it's important to think about, what the key driver is underlying affordability, because we've talked about sort of three components: mortgage principal and interest, property taxes, and utilities. But the key lever when you're talking about affordability right now, of course, is borrowing costs. And when we think about borrowing costs associated with ownership housing, a key bellwether is the 5-year fixed mortgage rate. And so if you look at the posted rate right now, we're sitting at or near record lows over the last 5 months. And so certainly home buyers in the Greater Toronto Area have benefited from very low borrowing costs, and to a great degree, these low borrowing costs have mitigated the strong price growth that we've seen over the past year. And so looking forward, it's important to think about, well, where do we expect this key lever underlying affordability? Where do we expect interest rates to go for the remainder of 2014? And in order to do that, we need to think about, well, what's sort of the key driver then of that 5-year mortgage rate? And a good indicator is the 5-year Government of Canada bond. This gives us an idea of what it costs lenders to raise money to then turn around and lend out to home buyers in the form of a mortgage. And if you look at the credit market consensus right now, we're not expecting to see much in the way of an increase in that 5-year Government of Canada bond yield through to the end of the year. And so at most probably a 20 basis point increase from where we are right now. And so that could feed through into a bit of an uptick in borrowing costs in terms of the 5-year fixed rate mortgage. But at the same time, there's still quite a large spread between the mortgage rate and the bond yield. And so you should still expect to see some considerable discounting off the posted rate on the part of lenders. And so the actual rate that many home buyers benefit from between now and the end of the year could be more or less unchanged from what we experienced in the first half of 2014. So the bottom line is that we expect interest rates to remain very accommodative in terms of home purchases, and so we expect to see the demand for ownership housing remain strong because of a strong affordability picture through the end of 2014. Now, if affordability was the only consideration when thinking about home sales through Toronto MLS, we'd be forecasting a record number of deals this year. But the problem is that the supply of homes for sale has been constrained. We just haven't seen as many listings come on the marketplace as we would have expected, say, at the beginning of the year. And so the issue is that people can't buy what isn't available for sale. So we've seen a lot more competition between buyers for some homes on the marketplace, and as a result, some buyers haven't been able to get a deal done on a home that meets their needs. So let's take a closer look at the listings trend for the last decade and a half or so. So if we look at new listings coming onto the Toronto MLS system between 2000 and say 2008, before we went into the recession, we saw a pretty strong and steady upward trend in the supply of homes for sale in the Greater Toronto Area. Now, coming out of the recession, while sales certainly rebounded, we didn't see the same type of rebound in terms of the supply of listings. And so number one, we haven't seen new listings move back to their pre-recession peak. And number two, the trend for new listings has more or less flattened out. Now, if we break down the number of new listings a little bit further, we see that the real change in that new listings trend was driven by the low-rise side of the market. So we're talking about listings for single detached, semi-detached, and townhomes. This is where we've seen that sort of flatlining in supply. And in contrast to this has been the condominium apartment market, where we've continued to see new listings of this home type trend upwards on the Toronto MLS system. And so there's three main underlying factors that have led to the constrained supply of homes for sale. Number one is the fact that between 2000 and 2008, we actually saw the trend for sales above the long-term norm when we look at sales on a per capita basis in the Greater Toronto Area. And one of the reasons for this is at the time, a lot of households felt that borrowing costs had gone as low as they were going to go. And so they pulled their decision to purchase a home forward to take advantage of the affordable housing situation that these low rates had brought on. And so some of these households that bought earlier than they otherwise would have simply aren't ready to move yet, and so they're not listing their home for sale. Now on top of this, of course, has been Places to Grow and Greenbelt in Ontario. So these provincial guidelines or policies have also led to a constrained supply of listings, especially on the low-rise front. As a result of these policies, we have not seen as much development of singles, semis, and townhomes, and so as a result, we haven't seen as much addition to supply, and that obviously feeds through into listings. Now, again, it's no surprise that we've continued to see the trend for condominium apartment listings move higher, because we have seen almost a reversal in development trends in the Greater Toronto Area, where now condominium apartments are accounting for the majority of home starts in the GTA. Now finally, we can look at the City of Toronto in particular. And this is where we have the additional land transfer tax. And third-party research and polling has suggested that some households, as a result of this additional land transfer tax, have simply decided to stay put. They're deciding to renovate their home rather than move and pay that additional upfront cost associated with the home buying tax in the City of Toronto. And so again, this has led to less supply coming on within the 416 area code and very tight market conditions. So the bottom line again is that you can't buy what's not for sale. And so this is why some households are continuing to find it difficult to find a home that meets their needs. And if we did see more listings come into the marketplace, we would in all likelihood be looking at a record level of transactions this year through the Toronto MLS system. Now, the discussion of listings also provides us with a nice segue into our discussion for prices. Now, in the Greater Toronto Area this year, we've seen very strong price growth for all home types, but particularly on the low-rise front. So again, singles, semis, and townhomes. And so again, what we've seen because of the constrained supply of listings is strong competition between buyers, which has served to exert upward pressure on the average selling price. Now, one way of measuring the impact of this competition in the marketplace is to calculate months of inventory. And so basically what we're doing is we're looking at active listings at the end of a given month and dividing this number by sales during that month. And so what we're saying is that if we didn't see any more listings come into the marketplace, how long would it take to deplete standing inventory? And now if you look at the low-rise segment of the market in particular, we've seen months of inventory at or near record lows through the first 5 months of 2014. And so what this has meant is that you've seen a lot of different households keying in on many different listings in the marketplace, and this has led to that strong price growth, high single-digit to low double-digit growth, both in the 416 area code, the City of Toronto, and surrounding regions as well. Now, it's important to point out that the condominium apartment market has also experienced strong price growth, albeit not as strongly as for singles, semis, and townhomes, but certainly still well above the rate of inflation. And so while we did see more supply of this home type come online over the last year, as we continue to see new projects reach the completion stage, there has been enough demand on the part of home buyers to see continued price growth in this segment of the marketplace as well. Now, looking forward through the end of the year, our overall forecast for the average selling price in the Greater Toronto Area in 2014 is $560,000. Now, obviously, this growth is going to be driven by that low-rise segment of the market, but we're expecting to see continued growth on the condo front as well. And in fact, it's been the strength in the condo market so far this year that actually led to a slight upgrade in the overall average price forecast for 2014 from $555,000 earlier this year now to $560,000. Now, this brings our discussion of our latest outlook to a close, but obviously the housing market will continue to evolve as we move through the spring and summer. So I look forward to speaking with you again as we move into the fall. Thank you very much.
Brought to you by GTA Realtors.